All right, so guys, sorry about that. We got some technical glitch. So some minor disconnection between the server. All right, I think that should be okay for now. Yeah, should be working now. Sorry guys, sorry about that. All right, let's continue. Let's continue. All right, what I was showing you is the position of platinum at the peak, and the position of commercial traders for platinum is at the new bottom. So we might also think of it as a potential weakness. However, it's on the rally, it's on the go, so it might stay at this stage for a long time. So we got to be careful about that. All right, so let's go to the analysis of gold again, because I know that's a market that people trade a lot. So regardless of silver, despite silver, you see the gold is not moving. By the way, that might be the reason of technical weakness of silver. So you see the gold is not reacting that much in comparison to silver. And the spread between gold and silver actually decreases right now. So I mean the silver outperforms gold. I don't think that would happen for the substantial amount of time, because if the gold holds the rally, so silver pops up, silver breaks, well, that might be okay. But if the gold doesn't support this rally, so probably this move is going to be retracing soon. All right, so as for gold, the situation that we see right now, it's an upswing, but it had touched the 2 standard deviations level 2 days ago. It's holding steady near this level, and there was an upswing which had started not so long ago. So basically, that's an uptrend. So nothing unusual here. That's an uptrend. But you see that the nature of this trend is not very easy. So this trend is what I can call is a stepping trend. So it's not already the new trend. It's not already the new business coming in. So it's rather a mature trend that goes, step by step inside of the trading range. So whenever that happens, of course, we need to be very careful when the market reaches the peak. So if you reach the peak, and you see that immediate reaction followed after market reaching the peak. So as I always say, so if you select your trade location, if you want to enter the trade, so don't select it at the peak. So don't select it at this area, particularly because you may face the quick liquidation, the quick correction, and quick sell-off. So is the sell-off over or not? So what might be potential plan for today for gold? Well, you see that the upside pressure is still on, and I would be very, very cautious about the markets trying to break through any formations. Just we have it here, for example. So potentially it might be some situation that might look like that. So it might be the false breakout through the range or through this formation. So I would be very carefully monitoring for false breakouts, something like that. Okay, so because currently it's in the correctional move for today. So be very careful with those bullish traps which might happen along the way. So can you use that for building your positions? Well, that's questionable, because still we don't yet have the very big volatility in the market. So if you're a day trader, you can certainly capture something out of that. I mean, for example, the small move, but I'm not sure about the continuation to the downside. Maybe that's not going to happen. Maybe it will stay here in this range until the Fed, because until the decision of the Federal Reserve, which is going to happen tomorrow, so market is not expected to make any substantial moves. It will be here. Okay, let's put it here on the chart. The Fed's decision is here, the market is here. So it will unlikely make any substantial developments, maybe any minor moves ahead of this move. So I would expect a range-bound action. So can you benefit out of that? Well, if you're a scalper or an active day trader, certainly you can try to do that. But for short-term traders who hold positions overnight, well, that would be extremely difficult, I think, because your risk is outpacing your potential reward, or maybe it's equal to your potential reward. It's like you open a position, risking your stop loss, and your profit target would be probably very small. So something like that. So ahead of the big news announcement, so that works usually like that. Where gold will go after publication of interest rate decision, the Fed's press conference, it's difficult to say because gold is not very much linked to the US dollar. For example, if US dollar will go down, probably gold will spike to the upside. So that might be the expected behavior. But we cannot say that for sure because gold was overheated for pretty much a long time. Many people are trying to get on the board of gold, and liquidations and spikes to the downside are a normal thing for this market. So that works like a normal situation. So I don't have any directional bias for gold right now, whether it will go up or down after publication of the interest rate and specifically the press conference. But I will definitely keep an eye on that. All right, so what else do we have? For example, S&P 500 and Nasdaq indices. So again, no action and volatility is pretty low. So you see these bars, doji candlesticks, that's extremely low volatility. And the VIX, which is the volatility index, let me show you, for example, it on TradingView. Here it is. So it's close to 20, which is not super low, but also it acts as a small level of volatility. The volatility level is actually small. And the fear and greed index from CNN, for example, if you go to Google and Google CNN fear and greed index, click it here. So basically, as a small level of volatility, the volatility level is actually small.